What's up, everyone?
Hello.
Welcome to tune in to this Facebook Live and YouTube Live, which title Price Action Trading Tools for Bursa Malaysia Derivatives Products. We will begin this live broadcast at 8:30. So just give us 3 more minutes to get to welcome all the participants to join in first. But if you're here early, please share this, Facebook live stream so that you'll be able to stand a chance to win 50 ringgit touch and go e-wallet reload pin. Okay, so we'll be rewarding 6 lucky winners in this Facebook live. So what you need to do is to share this Facebook live. Set it as a public post and tag 3 friends, and then the highest sharers, the top 6 sharers will win 50 ringgit worth of touch and go e-wallet reload pin. Okay, so this session is brought to you by Bursa Malaysia in collaboration with CGS-CIMB Futures. Okay, we will see you later at 8:30.
Okay. Shane, is it okay to ask you?
Sure.
Yeah. The video is live now, but I use the link. Then it say content not found.
Oh no, it's live on my screen. It is live right now.
It's live, is it?
Yeah, it's live.
1 second. Facebook.
Okay, see you all later. We will begin shortly in another 3 minutes. Yes, we are live on both YouTube and also Facebook. Okay, if you're ready, maybe you can type ready in the comment so we can see. Okay, if you're ready for this session, price action trading tools for Bursa Malaysia Derivatives Products. So type ready. Okay, for those of you who are tuning in right now. Oh, thank you so much, Hansu. Okay, we'll begin shortly. Just give us another 2 minutes. We'll begin on time at 8:30. Wow, thanks for the semangat. Okay, ready? Cool. There are more and more people joining in already. You all are early. So it has been so long that we never talk about futures because for the past couple of months, we are all in the equities market and also the Islamic capital market. Today is the first session that we do on the derivative market. Okay, and we are very honored to have one of the futures brokers representative from CGS-CIMB Futures to join us in our live interview session today. So it's also one of the first few sessions Facebook Live that we do. Now, how many of you here have already traded futures? If you have already traded futures, right, you type me in the comment and let me see, okay? If you have traded futures, and let me see if I speaking, let me know if, so I can understand your background for a little bit, and also so that Derek can understand your background for a little bit, okay? If you have already traded futures, okay, you type me, so we know that who are already the existing futures trader and who are very new. Okay, we have Jin Hee, who is already a trader. Hansu, thank you so much. Johnny, wow, I can recognize some of you are our frequent, webinar supporter. Okay, thanks. I hope that our session have enriched your life in one way or another. Okay, right now it's 8:30, so without further ado, just let me formally introduce you and welcome you to this session, which is titled Price Action Trading Tools for Bursa Malaysia Derivatives Products. Okay, so if you are been trading futures, you know that technical analysis is very important when it comes to futures trading, and majority of traders in the market are relying on the technical analysis to find an entry and also exit for futures trading, because futures are leverage products, and then it is involve margin, so it's essential that we know exactly what we are doing, and we know when we go long or go short a contract, we know exactly when we want to get out. So today our speaker will share with us more on his experience on doing price action trading. All right. So today on our guest today, we have Mr. Derek Teh from
Hi.
CGS-CIMB Futures. So he is a futures broker representative of CGS-CIMB Futures in Berhad. Now, allow me to briefly introduce Derek's background. So Derek Teh has a bachelor degree in accounting and finance from the Sheffield Hallam University of England. And Derek has been in the derivative industry since 2014 and being licensed by Securities Commission Malaysia for dealing in derivatives and also securities. So he works with both individual and institutional investor on optimal execution of transactions. So we are very honored to have you today here, Derek.
Hi, thank you, Shane. Thank you.
All right, cool. So before
Sure.
before I interview and ask him some questions on futures trading, just want to let you know that for those of you who are tuning in online, especially for our friends who are tuning in on Facebook, you're in the running to win this touch and go e-wallet reload pin worth 50 ringgit. So all you need to do is to share this Facebook live on your Facebook profile or in Facebook groups, or to the Facebook group, or in your Facebook profile page. Then set it as a public post so our team here can check who share. Then third is to tag 3 friends in this that you think may be interested in this futures trading. So share this on your Facebook page, and then tag 3 friends and set it as a public post so we'll be able to track. Okay, so the top 6 sharers will walk away with a 50 ringgit e-wallet touch and go e-wallet reload pin. All right. So without further ado, let us get into the topic. Now, Derek, could you tell us, right, what is a futures contract and how we can use it for trading? Could you tell us that maybe some of us here are new to futures? So can you tell us what is future contracts and how can we do it in a trading?
Okay. Sure. Thank you, Shane. Okay. First of all, here would like to wish everyone Selamat Hari Raya, Maaf Saya and Batin, to all our friends who are celebrating. Okay. Hope you will learn something today. Okay. Without any delay, okay, let me answer the question that posed by Shane just now. Actually, what is a futures? Actually, futures is a standardized legal agreement to buy or sell something at a predetermined price at a specific time in the futures. Actually, right now, because it's no more floor trading in Malaysia and most in around the world, even US only have like US and London still have the floor trading. So the transaction will be between party not known to each other because everything is go through online by system platform. So the asset transacted is usually a commodity or a financial instrument. Okay, Shane, may I share my screen right now? So
Sure.
that so that so
Yeah.
okay, one sec here, everyone. Share screen.
We're seeing your screen right now. You just go full screen.
Okay. Okay. Shane can see right now. Crude palm oil
Yeah,
futures
yes.
by
Can
Bursa
see.
Malaysia. Yeah.
Yeah.
Okay. This is one of the products that are being offered by our local exchange, Bursa Malaysia Derivatives Products, and this is one of the example for commodity futures. Okay, if let's say you would like to know more, you can go to Bursa Malaysia official website. You can know more details regarding this futures contract, like the trading hours, contract size, contract months, and the minimum price fluctuation as well. I already put down a link on my presentations slide, so you can go for it if you wish to know more for details. This is just for example, and this is a example for commodity. Then we have FTSE Bursa Malaysia KLCI Futures. What in short we call it FKLI. This is a example of financial instrument. So futures contracts are negotiated at futures exchange, which act as a marketplace between buyers and seller, like our sponsor today, Bursa Malaysia Derivatives Products. Okay, thank you, Shane.
All right. So I guess right now we have get a little bit of idea about what our futures trading are. Actually, right, if you have any questions to ask our guest today, you may actually type it along the way. Then we will address the questions to him along the way, lah. So if you know that we have been very fortunate because FCPO is the world's benchmark, in terms of crude palm oil futures. Our local FCPO is the most watched futures contract on crude palm oil. Everyone who wants to know what is around the world who wants to know what is the reference price for the futures in crude palm oil will actually refer to the Bursa Malaysia Derivatives Exchange. All right. So we live in a very strategic place whereby we can trade FCPO because we are our own, we are Malaysian citizens, and then we are living here, and then FCPO is it's a very active contracts that we can trade to make a living. Now, as I said, if you know how to do futures trading, you can actually make money not only in the bull market but also in the bear market, because in futures trading, not only you can go long a position, but you can also go short a position very easily. Correct, Derek?
Yes, you are right. Absolutely right. Because
so
sorry, please continue, Shane.
Yeah, I mean, because if you know how to go long, and if you can easily go long and go short, right, that means you can make money in a bull market and also in the bear market. So it gives you a recession-proof income. So for those of you who are looking into full-time futures, full-time trading, right, you should consider futures as one of your primary options.
Yes.
All right. So okay. So right now we have covered a little bit of futures trading, so that all of you have a bit of understanding about futures trading. So let me go to my next question to ask Derek, which is now, what is price action trading?
Okay. Price. Let me explain in a bit more details. Okay. Okay. You can see my side. Okay. Actually, for me, price action trading is a branch of technical analysis. Actually, it's under the umbrella of technical analysis, because price action trading use past and current price action to predict market movement. But right now, when you are talking about price action trading, actually is being used as an umbrella term for for analysis like chart pattern, bar pattern, and what we will be sharing with you later for candlestick patterns. Yeah, Shane.
Oh, okay. So later you'll talk more about the candlestick patterns, lah.
Yes.
Okay. Yeah.
Which
so
is under the umbrella of price action trading.
Okay. So for those of you who just joined, right, who missed the introduction, so we are running a Touch and Go e-wallet 50 ringgit campaign. Okay, for those of you who tune in, but it's only open for our friends here tuning in from Facebook. So if you're tuning in from Facebook, what you need to do is to share this Facebook live stream to your Facebook profile, also to Facebook groups, So and tag 3 friends. So the top 6 sharers will walk away with 50 ringgit touch and go e-wallet reload pin. So you just share it to Facebook groups whom that you feel that will benefit from these futures trading sessions. So right now we have understood more about price action trading, which is to see and observe the market price and try to anticipate what are the potential price movement. So and then
Yes.
just now, Derek, you mentioned about candlestick patterns, right? Maybe
Yes.
maybe some of us here are not aware of what are candlestick patterns. So could you tell us more about how did these candlestick patterns come about?
Yeah, sure, Shane. Okay. Let us go to the next slide. This actually is the origin of candlestick pattern. Actually, candlestick pattern is originated in Japan, not in the West. I mean, if you think it is in US or European country, no. This is originated in Japan by a legendary Japanese rice trader. Why I say he's a legendary? Because according to a statistic that time, he is he's the richest person in Japan at his time, and his name is Hoba Munihisha. Depends on which book that you're referring to. The name might be a bit different. This is how he looks like. I'm really not too sure whether this is really him or not, because it's too long already in the 18th century. So he subsequently dominated the Japanese rice market and built a huge fortune. As I mentioned before, he's the richest person in Japan at his time. So because he's so successful, people also try to study his trading technique and principle, which eventually evolved into the candlestick methodologies that we see today. And the Japanese use it to trade stock when the Japanese stock market started in 1870s. So sometimes he's considered to be the father of the candlestick. So this is the history, a bit of history about candlestick pattern. Okay, in more recently, about 30 years ago, in the 90s, okay, this person, Mr. Steve Nissen, he did a lot of studies and translation from Japanese research regarding candlestick charting, and he introduced the Japanese candlestick charting to the Western world, mainly US, European. He even being invited to be a speaker in World Bank regarding candlestick pattern. So if you are really interested in study candlestick pattern, because for me, the first thing in trading, let's say when you want to start trading, the first thing that you will be coming into is the chart. So candlestick for me is like ABC in the language. So you need to know the ABC first, then you need to know the grammar, then only you can write a sentence, then you can start your essay. So this is more or less like learning a language. So Mr. Steve Nissen book is very and highly recommended for candlestick pattern if for research. Yeah. Especially it's the Japanese candlestick charting technique. This is the first book. Then the Beyond Candlestick is the part 2.
I read the Steve Nissen book before also.
Yeah. So it's really good if you are asking me. So okay. This part might a bit we need to start everything. So if you are new to candlestick, so this part might be a bit of how to say, it's a bit of learning curve. But if you know this, then you will know you can follow easily on our next session. Okay, so first of all, this is a candlestick that we always look at the chart. If you are using our company iTrade, CGS-CIMB iTrade, or even TradingView or any other trading platform that you are currently using, the first thing that you will come across is in the chart is a candlestick pattern. Okay, so let us dig deeper. How actually what this candle thing looks like, and what is the meaning behind every of it. So you can see candlestick, actually it has a central portion. I mean, okay, maybe you can see the mouse. Okay, never mind. The center part is what we call a real body. This is the price distance between the open and the close. So the opening and the closing price will be being recorded under one candlestick. So the next one, the price distance between the open and the high for the period, because every candle they will have a one period. Let's say you are using daily, then it will be the opening and the high for the day. If you're using 60 minutes, then it will be that particular hours. So the price distance between the open and the high for the period is called upper shadow. So sometimes they also call it upper wick as well. This is the highest price being paid for a particular period. So it's marked as high under one candle. So the next one, the lower shadow. The lower shadow actually is the price distance between the close and the low for the period. So sometimes it's also called a lower wick as well. Okay, so right now we come back to the real body again. The real body actually display the opening and closing price of the let's say you are trading stock or futures, that is the being recorded. So closing, actually the most important among the four, the most important is the closing price, because it determines the conviction of the bull or the bear. If let's say if the candles close higher than it's open, then the real body most likely is white color, or is unfilled one. With the let's say opening price at the bottom of the real body and the closing price at the top, this is what we call a white candle. Then if let's say the security or the futures that you are traded close lower than is open, then most likely the real body is black. Then the opening price will be at the top, closing price at the bottom. Okay, so because right now, due to the advancement of technology and platform provider, they want to better highlight or visualize the price movement. Modern candlestick chart, especially those displayed digitally, often replace the black or white candle real body with color such as red color. Red color in Western country is lower closing. Blue or green is for higher closing. But however, if let's say you are using a platform from China, this is additional info, platform from China, then it will be opposite. That means red is for higher closing, green is for lower closing, because Chinese love red color. Red color means on. So this is the belief of Chinese community. So before you using a new platform, so you need to make sure everything is in order and correct first. Yeah. Okay, Shane.
All right.
Yeah.
So I guess we have learned how a candlestick pattern is, is built. So if you have any questions for our guest here, you may ask. I see that there's one question who want to ask you, like, what is the name of the platform that CGS-CIMB provide the user for trading derivative and futures products?
Okay. Currently, we are providing our client. Okay. before you start trading, you need to open an account with us, CGS-CIMB Futures. Then we will provide you with we are trading platform. Actually, it is from end to end. It's called CGS-CIMB iTrade. Then you can do your trading inside the platform. Actually, it's a web-based, and we will have a desktop base as well. So of course, mobile also included. So you can choose, you can use one ID and password to log in into 3. So depends on your preference. So I hope I answer your question. Is it Mr. Liao? Is it Mr. Liao?
Yeah, correct.
Yeah.
All right. Okay, cool. So we learned about candlestick pattern. So before we go to the next question, just want to do a bit of shout out, which is, if you are just newly joined our Facebook live streaming, so you may share this Facebook live streaming. If you share this, then you'll stand a chance to win 50 ringgit Touch and Go e-wallet voucher, and share it out and set it as a public post, and then tag 3 friends. Then you stand a chance to win the 50 ringgit Touch and Go e-wallet voucher. So Derek, could you tell us, like, just now we talk about some candlestick pattern. Now I understand that candlestick pattern sometimes give us the clue, right? Like when to buy and when to sell, give us the timing.
Yes.
And candlestick pattern is the leading indicator to let us know like what would be the possible movement next. So could you tell us that what are some of the bullish reversal candlestick patterns? Like when this candlestick pattern show up, right? Then we know that maybe the trend would change to bull in a short while.
Yeah. Okay. To answer this question, okay. For today's session, I will prepare 3 bullish reversal candlestick pattern to share with you guys in this beautiful evening. So the first one is the hammer, then the second one is the being called bullish engulfing, and a morning star. Actually, the name is maybe a bit difficult to memorize, but it's okay. What you need to understand is the logic behind the candlestick.
Okay. So you mean when any of these 3 show up, then trend may change, huh?
Yes, you are right. Okay. Before I go further, okay, let me explain the word the trend may change. Actually, a lot of people thinking that trend change, maybe the trend is going from down, then suddenly it will move up. It might not be the case. Actually, you still need to remember, actually we have 3 stages for a trend: bullish, bearish, and sideways. So the change of trend might be from a bull or bear, might change from bull to sideways or bear to sideways, then continue its previous trend. So it's not necessary it's a V shape, but it's not always the case. But sometimes, yes, they will change from a heavy drop, then suddenly a V shape. Then we can see from more example later on. Yeah. Okay, so we go for the first one. Okay, this one is being called a hammer. So actually, if you see a similar pattern in a chart, it does not necessarily mean that it will have some meaning. In order for us to we call this a hammer. I mean, this candlestick being qualified as a hammer. So there are some certain recognition criteria that you must know. So the first one is must come after a fall. Since it is a bullish reversal, must come after a fall. Then even it's a short-term decline is also still valid. Then the real body is at the upper end of the trading range. Then the color means is a bullish or bearish closing is not important. The lower shadow should be at least twice the height of the real body. So, and the last one, have no or a very short upper shadow, mean the candle is closed at its high. So that's mean no upper shadow or we call it upper wick. Totally no, it's like botak. So okay, we can use a CPO spread for June and July daily chart to illustrate this example. So you can see it's come after a fall. Then the real body is really minimum. In this, I think it still have a upper wick, but very minimum. So you can see the lower shadow is very long. So at least twice the height of the real body. Since you can see the real body is very small. So you can see that in this example, then after this, the market even going even higher and higher from like this pair of spread June, July from like positive 50 to around 200 plus. So you can see if you really manage to do a trading based on the correct candlestick, the risk and reward will be quite lucrative as well. So actually, like I said before, you don't need to memorize this is called hammer or called what, but you need to understand the reason behind why it is being like this. Okay, so you can see from a hammer, actually when the markets open, you can see the seller took control and pushed the price very low. That's why we will have see the lower shadow. But suddenly, a huge buying pressure step in and push the price higher until and close at the high. So that from this point, we know that buyer is trying to take control of the market. So this is the logic or the reason behind hammer is why we call it a bullish reversal candle pattern. It must come after a fall, even a short-term fall. So this point, our audience need to remember. If it's appear in a random place, it's not under a fall, then it is just a simple candle. It is not being called a hammer. It must come after a fall. Yeah. So the second one I would like to share is being called a bullish engulfing. This is a dual candlestick pattern. Mean it is consists of two candles. So the first one, okay, the same. The market has to be in a clearly definable downtrend. Even if the trend is short term, it is okay. Then the second candle need to cover the body of the first candle. Just the real body will do. The shadows, the upper wick and the lower wick, the shadows might not be engulfed. Engulfed actually mean makan lah. So you need to see that the second candle like totally cover the first candle. Then the color of these two candle is actually two opposite color, because the first one, if let's say it's appear under a downtrend, then the first one will be a bear candle. Then another one, the second candle will be the bullish candle. So okay, the logic behind, you try to imagine on the first candles, the seller are in control as they close lower. Then on the second candle, suddenly a strong buying pressure step in and close above the previous candle high. So if you understand the logic or what is happening in the market, then you should know who is in charge now, I think. So this means bull is try to gain control from the bear. So this is a very nice place to entry your position for long or it is time to consider your short position. You might either put a protective stop, or you can totally exit your close your open position, which is taking profit lah. So okay, let's see some example. This example is very good because this example is happened after if I'm not mistaken, this happened weeks after, or on the week that government announced MCO, Malaysian government announced MCO. Actually, it's happened last year March. This one is FPM KLCI daily chart, which is the cash, what we call cash daily chart. You can see this bullish engulfing is very, very strong. It's one day like cover for the even almost cover 4 days before it. So you from here you can see that the bull try to wrest the control from the bear. Okay. If you focus on the second bullish engulfing, you can see that actually change of trend might not be totally a V shape, not necessarily every time it's V shape. So from the second engulfing, second one, you can see that actually the market is moved sideways first, then even drop further. So a change of trend might not be from down to up, or up to down directly like a V shape, or a A shape, or what you call inverted A. So when you do study regarding candlestick, this is a very important concept that everyone must know. Okay, we go for the third bullish reversal candlestick. This is what we call morning star, because everything start. A lot of beautiful things start in the morning, so they call it morning star. So okay, as you need to have a recognition criteria as well. So the first one, this is a 3 candlestick pattern here. So that means it consists of 3 candlestick. That means if you are using daily chart, then it will be formed in the time of 3 days. If you are using an hourly chart, then at least you need to wait for 3 hours for this candle to be completed. So the first candle, you must have a bearish close. Then the second candle has a small range, very small. Then the third candle need to push well into the first candle, preferably more than 50, at least more than 50% of the first candle. Okay, let me explain why the logic behind this candle. Okay, on the first candle, you can see the first candle has a bearish close. That means on the first candle, the seller still in control, the bear still in control as the price closed lower. Then suddenly a small range on another day. Why is this being called a small range? Actually, small range you can consider as there is a indecision in the market. Mean the buyer and the seller are in equilibrium. So their pressure also in equilibrium. So it's create a small range. Buyer cannot gain control over the seller. Seller cannot gain control over the buyer. So they are fighting fearlessly. So suddenly, same logic again. On the third day, then on the third candle, you can see that the buyer is wrestling back the control from the seller. So on the third candle, you will clearly show that who is the boss now. As this, you can say that buyer is gaining a battlefield ground more and more from seller previously. So and the price closed higher as well. So this is the logic behind the morning star. So let's see. Okay, this is a CPO spread for August and 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 August November daily chart. So you can see that. Okay, the first one, the first candle have a bearish close, then a small candle as well, then suddenly a buyer step in. So you can see clearly from this, and if you can see there's a hammer just right beside the morning star. So this is a strong, you can foresee that this is a strong support level for buyer. Then you can see from it, buyer gains control and the price move higher and higher. From, I think this one should be at least also around 100 ticks, 100 ticks, 100 points, that means. Okay. Okay. So the next one will be the bearish chain.
All right, cool. So yeah, Derek, you have told us about 3 candlestick patterns: single, dual, and also double, and also the triple candlestick pattern.
Yeah.
So each one you give an example. So I believe these are highly uh this is uh this is the strongest strength, candlestick patterns,
Yes.
leading indicator that give the signal for bullish reversal. So right now you told us about bullish. Could you tell us more about what are the bearish? Which is on
Yeah.
the other hand, what are bearish candlestick pattern?
Sure, Shane. Okay. As Shane told everyone just now, for futures is a bit different with stock. Stock you only can buy, then hope the price to go up. I mean, this one is exclude those proprietary day trading, intraday short selling. I mean, we as a normal investor or normal trader, for futures, actually you can sell first and buy later. So you can easily close your position, then open it. Short position is very easy and very common in futures trading. It's a bit different from equities. So I also prepare 3 bearish reversal candlestick pattern to share with our live chat audience tonight. Okay, the first one is also called a shooting star. This is a single candlestick pattern. Then the next one is also a bearish engulfing. Then the last one will be the evening star. Actually, from the name, I think you also can guess. Actually, they are the opposite of the first bullish reversal candlestick pattern that I mentioned earlier, because everything come in pair. So there's a male and female. So in candlestick, they also apply the same theory. Okay, let's just go to the first one, the shooting star. Okay, everyone can see the shooting star here. Okay. Okay, for the recognition criteria for shooting star, this is a bearish case. So this we plan to do short, or if you are holding a long position, you are trying to exit your current open position of long. So everyone, you can take a look at this. So okay, the first one must come after a rally, even is a short. I mean, for shooting star is a bit different than hammer. This one preferably is a long rally. It is a long rally, a clearly defined rally. So the next one is a little to no lower shadow. So it's like almost potak like that lah. So the price need to close at the bottom, at least bottom 25% of the trading range. So the upper shadow is about 2 or 3 times the length of the body. So we use an example from CPO. Yeah, you can see around the price of 4,080, it formed a shooting star here. So you can see that it's a shooting star. So you can plan to exit your long position, or you can plan to initiate a short position. So this drop, actually this is not a drop, just a correction. So we assume from the shooting star drop to the hammer, you can see a small hammer in the bottom of the red candle. Here is around, I think, at least 80, at least around 90 to 100 points already. Yeah. So, okay. So we can, okay, sorry. Forgot about the logic behind the shooting star. Okay, let me share with you guys here. Okay, you imagine when the market opened, the buyer took control and pushed the price higher. That's why you have a long shadow, long upper shadow. Then at the buying climax, everyone, buyer. The price is is going to move higher and higher. Then suddenly, a huge selling pressure step in and push the price lower. So this have a bearish indicator for this, mean that something is not right. So if you cannot remember the name of this candle, at least when you see it, you will link it to something is not right. So this is a shooting star. Okay, so we move to the next one. Next one is the bearish engulfing candle. This is the dual candlestick pattern, but this one is for bearish one. Mean we plan to do a sell or close our long position. So the first one, the first candle need to have a bullish close because the buyer think that they are still in control. So the next one, suddenly the body of the second candle completely cover the body of the first candle. The body, the shadow need not be covered as well. But if it's even cover the shadow, then you can see that this indicate the strength of the bear. So that means bear already prepared for it and they try to wrest the control from the bull. So the second candle must close bearish. So the first candle and the second candle is totally opposite color. Okay, opposite color. Okay, so actually for this sharing session, actually for the bullish and bearish engulfing dual candlestick pattern, actually this is a reverse of the bullish engulfing pattern, but you need to reverse the concept. That's mean on the first candle, the buyer still in control. Then suddenly, buyer step in. So we follow the whale, we follow the trend and follow the big guys. Big guys mean we are not too sure who they are, but mostly maybe big institutional traders or big hedge fund or big plantation company. If for CPO, they are doing a lot of hedging in CPO. So we follow them. We don't fight against them. So let's say they think that my market is a bit hot, then maybe you can initiate a close of your long position to take some profit, or you need to set up a protective stop. Yeah. So this one is also a real life example. This is a SCPO spread October 21 and November 21 daily chart. Actually, you can actually see that there's a shooting star. Then on the next day, the bearish one also engulfed the real body of the previous candle. So this form the bearish engulfing. Even if you can see on the top before it is also a similar one. It's also a shooting star, but this one we call a dodgy gravestone, since this is a dodgy, is a dodgy. But the second red candlestick also covered the first body, the first candlestick's body. So you can see the price like from 80, positive 80, drop to almost like stop at 10. So so this is quite a lucrative trade, even for one lot, even for just one lot. Okay, the last one. This one is called Evening Star, triple candlestick pattern. Okay, a saying in Chinese, good things ends in evening. 夕陽無限好 if for those who know. So this is a bit similar to the saying, a Chinese saying. So the first candle, it has a bullish close. Everything looks fine. Then suddenly, the second candle has a small range. That means the market is in a indecision stage. That means bull want to attack, but they are also a bit afraid of bear. So they are not there to do another attack. So the buying and selling power is almost break even. They're offsetting each other. That's why on the second candle you have a small range. So suddenly on a third candle is closed aggressively lower into the first candle, more than need to what we call close aggressively is close below 50% of the first candle. Okay, so you can see from here, who is trying to initiate an attack. I don't think it is a bear. I don't think it's a bull, but definitely a bear is doing something to wrest control from the bull. Okay, so okay. This is a CPO spread DAC 21 and Jan 22. This one is a daily chart. So if you can see the question mark and a question mark, so do you think that the first one considered as a evening star? Maybe if you think it is, then maybe you can write yes or no on and let me and Shane know about this. Yeah, just a small exercise.
Okay.
Yeah.
Yes or no?
Yeah, just yes or no.
Nobody responds yet. Yes, someone say yes, someone say no. Liu say no. Liu say no. And say
No.
yes. Evelyn say no.
No. Okay. Let me okay. Why I suddenly ask you guys about this? Actually, the previous example that I screenshot and share with you guys, actually in real life, there's no so many typical textbook candlestick pattern. So sometimes you might see a bit of a variation. Variation means it's like 50. If let's say you ask me, I will say yes. Then you ask another person, he might say no or yes. I'm not too sure. So that's why in trading, there's no we call it holy grain. So this is the concept that I would like to share with you guys. There's no holy grains, because in trading, actually we are dealing with a probability, and we are dealing with uncertainty. That's why we need to have a bit of emotional and discipline control. So first, I would say that no emotional trading, no chase high, Q low, mean you see the market is moved for quite far already, then you only join in the market. Then but that time the market might a bit exhausted already. The market might reverse down. So no emotional trading. Wait for the right time. Since let's from the example, you also can see that maybe I wait for a hammer, or wait for a bullish or bearish engulfing, then only I do my buying or selling. Depends on the chart condition. So and after your entry, even for before your entry, you already need to think about where do I need to get out of this trade. That means I'm wrong. Okay, I surrender, because market is always right. We do not trade against the market, and we do not take a risk that, and we take the risk, but the reward is not justifiable. You already know, like if you, let's say you try to buy here, but you when you do a research, you do a technical analysis, charting, even the support resistance is just above your entry price. So you might need to reconsider your entry. Is it a trade that I would take, or I need to hold back for a while, wait the market to reverse a bit first? So the most important thing is need to cut loss, always cut loss. Know where, know a place that we know that we are wrong. Okay, I'm wrong. Okay, I'm ready to get out. So when next time, when the times come, you still have the bullet to hunt. So I would like to say that trade really like a sniper. Don't use emotional. Wait for the price, the chart tell you to do so, then only you take your shot. Yeah, I think that's more or less for my sharing session today. Yeah, I will pass back to Shane. Maybe some Q&A. Shane?
Oh yeah, sure. If you have any
Yeah,
questions to ask Derek in terms of futures trading or in
yeah,
terms of price action trading, so you may ask and write in the YouTube or also Facebook, live. So we'll be
yeah.
able to address it to them. So thanks for sharing with us, our futures trading and FCPO, FKLI, and also the candlestick patterns. That will give us
Welcome,
an
Shane.
early indication of the possible trend reversal. So if any questions for Derek, you may write in the YouTube or also Facebook. So any more advice you want to share with us for those of them who are like for those of us who are futures who are new to futures trading?
Okay. Then need to come back to these slides again. Okay. Honestly, the most important one is cut loss. Know where we are wrong and get out of the position fast, because we don't want to. Because in trading, we always say that cut the losses short and let the profit run. So if you do not practice the concept of cut loss or cutting loss, then you are not practicing the simple trading concept. Like Warren Buffett, they have do not lose money. Then the second is do not forget about rules number 1. This is something a lot of trading expert before us, they also told the same thing. Actually, even George Soros also saying that it does not matter that how many loss, how many money that you make when you are right. So actually, it's all about the risk management. It's all about risk management. If your risk management is good, then you no need to take care. Then the profit will take care by itself. So you no need to worry. You need to manage your risk precisely, and if it's because people tend to be emotion. Yeah, when you are in a trade, you tends to be emotion. If let's say you're very long, you hope that suddenly tomorrow it will be get up. I think every one of us also hope like that. But market will not always act that way. It might against us. So we are planning ahead. Let's say the market is against us, what we should do. So we are trading according to the plan. Yeah, this is yeah.
Okay, great. Now, Leo would like to ask, like, can you project the trend for FM70 May contract?
Project the trend for
Maybe
FM. Oh, okay. Okay. Liao, so okay. Like I mentioned, okay, just for quick sharing lah. Actually, for candlestick pattern, we do not do any anticipation or projection. We wait for the signal. Let's say the signal, like a car signal, is blinking. Then we only act on it. We actually, you can say we are a bit passive, but we do not put our emotion inside the trading. We are not proving that we are right. We are clever than the market. We are trying to follow the market. Let's say the market is trying to hit us. It might be a bit of problem here, so we need to get out. Yeah, actually, candlestick pattern is also a great risk management tool. Actually, we don't for candlestick pattern trading, we do not do projection. We wait the market to close first. When the market is not running, then that time we do our planning and thinking. That's why, like what I say, no emotional trading. If we do projection, it might lead us to believe that our projection is correct. We try to believe our projection. So in candlestick trading, we do not do that. We are a trade signal follower. We can say that we are trade signal follower. Then we consider our risk and reward. Then if let's say we are wrong, then we will get out. If we are right, then we'll let the profit run. Maybe we will put a protective stop. Then if let's say it hit, then okay, I get out. Then I hope I answer your question, Liao.
Okay. So the next question is by Wei Jian. Like, what do you mean by the spread FCPO December and January? So why 21 and why 22?
Okay. I address this question from Chang Wei Jian. Okay, actually, if you notice that even because futures have a lot of different contract month. Let's say for CPO, we can see from the contract spec. Yeah, contract spec. Okay, you can see that contract month, you have spot month and the next 11 succeeding month, and thereafter alternate months up to 36 months ahead. So spread trading actually is a composition of a different month. Let's say that 21 and Jan 22. Actually, we might be doing a long December. We are holding a long December 21 contract. Then we are shorting the Jan 22 contract, because you might think that we are the difference between these two contract months. We trade the difference. Let's say if the difference if keep on increasing, then I'm a long. Holding a long position for the CPO spread December 21 and Jan 21. Then I will make money. If let's say the market is against me, then it's go lower, then I will need to cut loss. Yeah. Is it what you mean by spread FCPO DEC 21 and Jan 22? Did I answer your question, Vijen? If you say, maybe you can let us know, lah, Vijen. Hope I address your question. Yes, Shane?
Yeah, basically it's a bit more advanced trading strategy in futures called calendar spread. It's a calendar spread.
Calendar spread is a calendar spread. Yes.
So they just the calendars are December 2021 and also January 2022. So they took the two contracts and try to find the spread between these 2 months and see which one widen, which one which one widen, which one tighten. Yeah, to earn from the spread trading. It's more stable. Should I use the word stable? It's a lower risk compared to outright trading. Outright trading means you long one contract or you short one contract. I mean, you just focus on one particular contract month, and you establish a position, whether it's long position or your short position. But when you do spread trading, in this case the calendar spread, then you are go long in one contract and go short in the other month contract. Okay. Yes. So to get the difference. But of course, don't worry, if you are new to spread trading, we have our upcoming webinar to teach you more about spread trading. So today is just an introduction. Okay. Today's session, I think I believe Derek, you purposely put out the slide on all the spread charts, right?
Yes.
Yeah. Because the upcoming session, we will talk more about spread trading to teach you how you can use spread trading for position traders. So this will introduce you to the concept of spread trading in the futures market. Oh yeah, you see there are there are similar questions. The next question is by YM Chong, how to open a futures trading account with CGS-CIMB, and the other is by Max Lee, who asks, Derek, where's the contact number? I'd like to open a futures account with CIMB. Okay,
okay, sure. Right. I'll share with you guys in the end of the session. Maybe you can jot down or take a picture.
Okay.
Yeah. Okay.
So the next question.
I share now. Yeah.
Okay.
Everyone who are interested, this is our company dealing email. Anything you can let us know. Then we have now contact here. So anything you can just let me know. If you have a question, okay, just let me know as well. So anyone who are interested, maybe can take a picture or just a print screen. Thank you.
Yeah, just contact 0322658908 or write into futuresbroking.my@cgs-cimb.com.
Yes.
The next question is by our friend here tuning in from YouTube. Does CGS-CIMB iTrade has a desktop interface? Where can I access it?
Oh, okay. Let me answer this question first. Yes, actually, we have a desktop base, or you can log in using Mozilla Internet Explorer or Google Chrome. You just need to have the ID and password. When you are opening an account, we will pass you the ID. We will create you the ID and password. Then you can access from your mobile. There is an app as well, so you can access from your internet browser or your desktop, laptop, no problem. Your iPad, your Huawei, your what they call Android. Sorry, I mean your devices. So actually, you can. But of course, you need to open a futures trading account first. Yeah.
Okay.
Yeah.
Leah would have follow-up question. Is there
Yeah.
any promotion? I think he refers to opening account with CGS-CIMB.
Oh, okay, sure. You drop us an email. Yeah, we can discuss further. Everything can be discussed. Yeah,
Okay. Maybe
just
free
let me know.
free consultation 1-to-1 with Derek Teh lah. After MCO,
Okay.
not now. Oh,
Yeah,
now
yeah. That's it.
now it's probably conducted by Zoom lah. Okay.
Yeah,
I'm just kidding. I'm just
eh,
kidding. I didn't promise
yeah.
anything on behalf of
No problem, no
CGS-CIMB.
problem. Yeah, and we have the next section, which is the spread trading. Yeah, everyone who please note down the date so you can join as well.
Okay.
This one is from by Jen Hao.
Jin Hao. Okay. Okay.
Jin Hao, sorry.
All right. So let me move to my screen.
Yeah, sure.
Okay. I guess no more. Looks like no more question for you already. All right. So let me see if I can show my screen for a bit. So thanks everyone for tuning in until now. So let me tell you more about the result for
Thank you.
the touch and go contest. All right. So I believe you all are seeing my screen right now, right? Okay. So for our friend here, who win the touch and go reload pin worth 50 ringgit. So this is an e-wallet reload pin. So they are Liao Yok Long, Fridau Zilikram, if I pronounce your name right, apology if I got it wrong. Steve Lai, Chong Kam Fat, Joachim Anthony Semi, and Sif Fiza. All right. So these are the 6 Facebook users who are very active in sharing this and also tagging your friends. So thanks for our friends here who are relentlessly and actively share this out so that more of your friends can join this Facebook live and also YouTube live stream to learn more about futures trading. Okay, so if you are one of these 6 person lucky winners here, please private message us on Facebook, on our page, and leave us with your contact number, which is your email, and also so what we need is your full name, your contact number, and also your email address. So give us your full name, contact number, email address, you private message us, and then we will arrange the delivery of the touch and go e-wallet reload pin voucher to you. All right. So congratulations to these 6 person, who are Liu Yok Long, Fidal Zilikram, Steve Lai, Chong Kam Fat, Joachim Anthony Semi, and also Sai Fiza, if I pronounce your names correctly. Apologies if I got that wrong. All right. So yeah, the next sessions that we have with with CGS-CIMB is and also brought to you by Bursa Malaysia is this topic called spread trading for precision traders. Happening on the 8th of June. It's a Tuesday. So Jin Hao will basically be the main speaker, whereby Derek will come in a short while to talk more about CGS-CIMB. All right. So Jin Hao will share with you more about spread trading for precision traders. If you're new to spread trading, you don't know how you can do spread trading, essentially on the calendar spread in the futures market. So please register for this session, spread trading for precision traders, where you learn a great deal from Jin Hao about how we can do spread trading on the futures market. So happening on a Tuesday, 8th of June 2021, which is next month, probably 2 weeks from now, 8:30 to 10 o'clock. And on that webinar, we also give away 3 touch and go e-wallet reload pin worth 100 ringgit. So we're giving out more. So we give away 3 touch and go e-wallet reload pin worth 100 ringgit to 3 lucky winners. So today we give away 6 worth 50 ringgit, and then we allocated another 300 ringgit for the webinar sessions. All right. So thanks to our sponsors, which are CGS-CIMB and also Bursa Malaysia, to bring to you this e-wallet voucher. All right. So not only you come to learn for free, but you also stand a chance to win some money. Okay. Yeah, I guess that's all. I've given you the link in the YouTube and also in the Facebook, YouTube channel, and also in the Facebook Live. So remember to register for these sessions. All right. Okay. Looks like no more questions on my screen.
Yeah.
So all right. Okay, so thanks everyone for tuning in today's Facebook Live and also YouTube live stream. So I hope that you have learned a great deal from Derek about price action tradings in the futures market. So remember to spot up for this, candlestick patterns to tell you the indication for possible trend reversal. It could be a bullish trend reversal or bearish trend reversal. Okay, technical analysis is very critical, especially when it comes to futures trading. So being a candlestick patterns, if you master candlestick pattern, then it can help you in in futures trading. All right. So with that, thanks everyone for tuning in. So see you next time. All right.
Okay,
So
thank you.
thanks Derek for joining us.
Thank you, Shane. Thank you, everyone. Good
Okay.
night.
Bye
Good
and
night.
congratulations to all the
Bye-bye.
winners.
Bye-bye. Yes, bye-bye.